All right. Today is Sunday, the 22nd of June. This is a recap for the stock market activities for the week that was and an outlook for the week to come. And folks, I got a good one for you tonight. What happened over the weekend? I was traveling, I just got back home, and social media is insane and everybody's going crazy. What's going on? Did I miss anything here? Oh yeah, the US entered a new Middle Eastern war. What can go wrong here? I mean, it's not like we have previous examples of failure or anything. Every time we intervene in the Middle East, it turns out to be peaches and cream. Now, if you're old enough to remember the old wars, you know that's not true, and you don't want any piece of it at all. But there is always a new generation of donkeys who forgets what happened in the past, and they want to go crazy again. And that's what's going on right now, because we went crazy, and things are about to get crazier. So let's talk about it, and here it is, in focus tonight. War. Yeah, baby. And now we're in it to win it. We're all in now. And of course, rumor has it that the orgasm released by the warmongers last night was so big and massive. According to the official government statistics, the load released by the warmongers last night is about 10 times as large as the maximum payload of a B-2 bomber. It gives a new meaning to the Midnight Hammer operation. In a nutshell, the U.S. dropped a massive amount of bombs on Iranian nuclear reactors and locations. As, of course, we've explained repeatedly in this program, it's gonna happen. It's in the bag, it's inevitable, and what's also inevitable is what's gonna happen after. That's what's really important. One step at a time. As I said, not really hard to predict, and I think we've done it before about 99% of everybody. This channel was pretty much the first that told you that this is gonna happen. And soon enough, the bets on Polymarket on military action against Iran before July was moving significantly higher. We're talking about 60%, 70%, 80% at some point. So it was pretty much in the bag, and we got it. And the question now becomes, what happened and what now? What happened is we dropped a massive amount of bombs, and according to the president last night, he says that Iranian nuclear sites are obliterated. They're gone. Poof. If you look at the satellite pictures of the nuclear facility in Iran, you can see fresh craters in the mountain. I'm highlighting two of them right here. You can see them. That's where the bombs from the B-2 bombers went through. Meanwhile, the load that you shot last night, Midnight Hammer, went right in your pants. But this one penetrated. The question now becomes, did it penetrate and explode and just the mountain never got pregnant? The nuclear facilities are still here? Who knows? It looks like a massive facility to me. Kind of reminds me of the Grand Canyon. But another rumor also says that after all of the bombing that we got from the B-2 bombers, the Iranian nuclear facility is gone. It's all destroyed underneath it all. But of course, intelligence sources are now reviewing everything and saying that the Iranians moved all of the nuclear sensitive material to that building right there, which they forgot to bomb for some reason. So the question now, of course, becomes mission accomplished? Question mark. Obliterated, as the president said last night and his stooges behind him? Or is it the Iranian narrative that says, oh, nothing happened. We moved everything before the strikes. We knew. I think the truth is somewhere between, because you see this satellite picture right here. That's before the strikes. There were loaded trucks coming in and out of that facility all day long. So we got to question a few things. And if you grab your tinfoil hat and you put it on, the first question that's going to come to your mind is, was this coordinated? Did we tell the Iranians we're going to do it? Clean up a little bit and let us know when you're ready. I see it's a viable tinfoil hat kind of thinking, but I don't think so. If I had to choose right now, I would bet on no, there was no coordination. But again, do you trust the Trump administration's assessment? Because they lie all the time. Do you trust the Iranian assessment? Knowing that the Iranian intelligence has more holes in it than Bill Belichick's late life crisis t-shirt. So Maverick is going to say, here's how I'm going to verify whether the sites were obliterated or not. Number one, do we have nuclear radiation? Because if it is mission accomplished, then you're going to have some sort of radiation showing up. And the latest news say, at least from the IAEA, they say no radiation spike after Iran nuclear site strikes. So nothing is emitting from the nuclear sites. And even if the strike was deep underground, you would detect some sort of radiation. It's not like Elon Musk's drug test where you can pay the doctor. So right off the gate, since there is no radiation, I would say damaged, but maybe not obliterated. Number two, the Iranian response. Because if there was significant damage, as in the facility is over, it's gone, it's poof, the response would be extreme. On both ends of the spectrum, either the Iranians would surrender right away and say, let's make a deal, or they're going to go guns blazing. If you're going down, might as well just swing as hard as you can. But if there is a measured response, that tells me that maybe the facilities are damaged, but the most sensitive material has been moved out of these facilities. And that's my assessment. Now, let's talk about Iran's options, because this is going to have an impact on the market. This is going to have an impact on a lot of things. I'm going to categorize 5 options here, going from low to high risk. And of course, the lowest risk option for Iran is to negotiate, to surrender, say, you know what, okay, you got us, let's negotiate now. Well, that's never going to happen now. So we move down to the next option, which is intensifying missile attacks on Israel. And they're already doing that, so we got a barrage of missiles this morning in Tel Aviv. Huge damage showing up all over the place. They can escalate more by attacking U.S. bases via proxies. That's a possibility. We already got some warnings today. The New York Times say that intelligence officials already detected signs that Iran-backed militias both in Iraq and Syria are readying for an attack on U.S. bases. So that's a possibility. That could happen. It's going to escalate things a little bit, but not a dangerous level, because if we're going to retaliate, we're probably going to retaliate against the specific group that carries the attack. And we've already moved a lot of personnel out of the Middle East, so it's not really a high-risk kind of scenario. We have another higher-risk kind of option, which is attack U.S. bases directly. And we know that Iran has the capacity to strike individual bases, be it in the Middle East, be it in the Indian Ocean, be it in the Mediterranean. And they can do it with a lot of precision and inflict a lot of damage because they have a huge arsenal of missiles, and you see the impact that we see in Israel, for example. But at the same time, it could be a cooked response. At least some are going to look at it that way. What I mean by that is, in the first Trump administration, when they assassinated General Soleimani, the response by Iran was bombing air bases in Iraq. But they already told us about it beforehand, so we moved the personnel out of the way, even though there were reports after that they got brain injuries. It became sort of a big deal with the injuries and the compensation and all of that. But at the end of the day, nobody died. So it was a coordinated kind of response. This is why it is not the highest risk possibility, which is closing the Strait of Hormuz. This one is going to have huge implications in the global economy, not to mention, of course, that it's going to guarantee that we're going to go head-to-head, ship-to-ship, boots-in-the-ground fight against Iran. Now, the headline from the New York Post reads that Iran orders the closure of the Strait of Hormuz, putting 1/5 of the world oil supply at risk. Now, this was a decision by the Iranian parliament. It is awaiting final approval. So they're just keeping that as an option right now and readying to execute that option if they need to. We have some reports like Maersk, for example. They say that they're continuing to sail through the Strait of Hormuz. No problems for now. Other companies, oil tankers specifically, saying, we're just going to avoid the region altogether. If you want us to go in, you got to pay us more, because we're going to pay more for insurance too. And this is why I said, look, all of this is going to be pretty good for the oil tankers kind of stocks, because they can do a lot of price gouging right now. The odds for the closure of the Strait of Hormuz in poly market is about 50% chance, 50-50. Could happen, it could not happen. So it is of serious consideration right now. The odds went all the way to 60 this morning, but now they're down to 50, so we'll see where they're going to settle. Of course, why is this the most dangerous and the riskier scenario? The fifth option, not just because it's going to invite war, a direct face-to-face confrontation between Iran and USA. Not because it's just going to cut off the supply of oil and increase oil pricing globally, impacting a lot of these Middle Eastern oil-producing nations. But the most important impact is the effect on China, because China is the biggest importer of oil from that strait, from that region. And if they get cut off, it's going to have devastating economic impact against China. And folks, this week we produced a video for the members. We talked about China's stake in the Middle East war, the economic impact, and of course, would that economic impact be big enough as in to invite China into this conflict militarily? We talked about all of that, and of course, in tomorrow's video, we're going to do Russia's stake from the Middle East war. So folks, join us if you can. It's the only way we can beat the YouTube oligarchy. We don't want to be under their rules, so we have to be under yours. So please consider joining us as a member. and we're going to put that video out for you tomorrow. But the US is asking China to turn up the heat against Iran and say, don't close the Strait of Hormuz. But I showed you that China is pissed off about this situation. They think that the US and Israel crossed many red lines, and they're not going to be obliged to say, okay, US, we're just going to accommodate whatever you want. Yeah, we'll tell Iran, don't close it. At the same time, if it is closed, it's going to impact China negatively. They're going to get cut off of about 30 to 40% of their imports of oil. Now, there is a scenario where we can see Iran closing the Strait of Hormuz and not cutting off China's supply. But that's going to require transporting the oil from Iran into Pakistan. And then Chinese ships sail all over Pakistan without crossing the Strait of Hormuz, pick up the oil and move back. Meanwhile, Iran cuts off others besides China. It is a possibility. It requires a lot of logistics, of course. It's not easy just to ship the oil across the border, number one. And number two, what is Pakistan's stake from all of this? Because Pakistan been outspoken about their opposition to this war and in support of Iran. At the same time, they have alliances with the US and China. So Pakistan is in a weird position where at some point I think this is going to break. Pakistan will have to choose one side versus the other. But right now they are in a strategic position where they have alliances with Russia, with China, and the US. And that came out handy when the conflict between India and Pakistan started. Of course, the fear by Pakistan that if Iran falls, number one, we could see instability within Pakistan. Number two, who's to say that Israel, Bibi Netanyahu, is not going to come out and say, oh, now we're finished with Iran. Next order, please, Mr. Trump. We're going to take down Pakistan because they have nuclear weapons and they might fire them at Israel. We've seen how fast the Iranian missiles can travel, so Pakistan is close enough. Only the difference is they got a nuclear weapon. So it is in the interest of Pakistan to keep a buffer between it and Israel. That's Iran. At the same time, they don't want to piss off the alliances. I mean, it's kind of clownish that the day before the strikes against Iranian nuclear facilities, Pakistan actually nominated DJT for a peace prize, the Nobel Peace Prize, which he's really obsessed with right now. And then they had to take it back the next day when he bombed the Iranian nuclear facilities. So what would Pakistan do? Would they accept that kind of scenario where Iran ships the oil and then they transport it to China? How would that jive with the US? All important questions. And we don't know what the answer is going to be. But it is a possibility, at least the market right now says 50% chance that Iran would go with the option of closing the Strait of Hormuz. Now, there is the sixth option, the title of the video, and it could be the most plausible option for Iran. We will talk about it in a minute, but you will hear a lot of talking heads, the experts in social media and the business channels. They say, you know what, even if Iran closes the Strait of Hormuz, we don't import oil from the Middle East anyways. We have production surplus, as you can see right here, from shale oil. We're now net producer of oil. Matter of fact, the number one producer of oil in the world, by far. We put out 20 million barrels a day. At number two, Saudi with 10 million barrels. So the U.S. is way, way ahead. Now, a lot of folks would say, since we're not importing a lot of oil from Saudi or the Gulf anyways, we're going to have minimal impact. Even if they close the Strait of Hormuz, nothing is going to happen, Maverick. It shows how foolish and gullible these people are. A bunch of morons, really, because they don't understand how the oil market trades. If we have a closure in the Strait of Hormuz and we see the price of crude oil coming out of that region moving significantly higher, it's going to affect all kind of oil products and oil commodities that come out. Why? Because if China cannot access Middle Eastern oil, they have to bid now for WTI oil and Brent oil and other kind of oil. So the prices will go higher here too, as we see demand surging, supply nowhere to be found. So you will feel the impact. If there is a closure of the Strait of Hormuz, you will see massive impact in the price of oil. You will see impact in the price at the pump that you're going to pay. You're going to see an impact on inflation. You're going to see an impact on the monetary policy by the Federal Reserve. Not to mention, of course, you might see an impact on the Japanese yen. You might see an impact on the Bank of Japan. We know that the crash that we got last year was all about the Japanese yen. What do we have right now? The inflation numbers in Japan are not looking pretty good. And if there is an increase in the price of oil, guess who imports a lot of oil out of the Middle East? It's Japan. If you cut them off and the price of oil surges significantly higher, what do you think will happen in Japan? Inflation will go significantly higher. What do you think that will prompt the BOJ to do? Firm up the yen, increase interest rates, and here we go. We're going to rewind and resume the Japanese yen carry trade, which was devastating for the market. Not a lot of folks are talking about this right now. All the gobbleheads and TV and social medias, they're not even talking about all of this. They're only going to talk about it because they've heard it here first. They thought, oh, wow, that's a good point, Maverick. And before we reveal the sixth option, which I think the most viable and the most dangerous, really, let's go back to the board from last week. We did the scenario analysis of what's going to happen next. We said that Israel has three objectives from all of this. Number one, damage the nuclear and military capabilities of Iran. Notice that I used the word damage, not eliminate, because that's impossible. And we brainstormed three options after that. The one that took place, obviously, is Trump joins. So right now, we got a check mark on Trump joins. We got a check mark on the damage against the nuclear and military capabilities of Iran. But the real objective out of all of this, and I was the first one to say it, by the way, in Twitter, the unstated objective and the primary one is regime change. That's what Israel wants, regime change, a coup. The problem is you cannot really instate a regime change without arousing the population's anger against that regime. Historically speaking, the way you do that is you cut off the economy. In the case of Iran, that means you got to damage the oil and gas facilities. But that was a red line because that's going to lead to inflation going higher as the price of crude also surges higher. And that was a no-go for Trump, who was elected to combat inflation. This is why the Israelis haven't done that yet. And both Trump and the Israelis now believe that they can skip number two and move straight ahead to regime change. And they can do that by the assassination of the Ayatollah, which I told you, anybody who thinks that they're going to assassinate the Ayatollah and then bring back the Shah, whatever, and the Iranian people will feel liberated, as Dick Cheney said about Iraq. They're going to say, thank you, America, thank you, Israel, we love you so much, and we love the Shah. If you think that's what's going to happen, you're obviously way, way, way too naive to even talk about this. What's going to happen is, if the Ayatollah is assassinated, they're going to go to war now. The Strait of Hormuz will be the least of the concerns because they're going to go full blast. And the country will go to civil war at some point. You bring back the Shah, they'll kill him in about 6 months, tops. But like I said, this is the objective right now. And even Trump today said that it's not politically correct to use the term regime change. But if the current Iranian regime is unable to make Iran great again, why wouldn't there be a regime change? MAGA. So you voted for MAGA, you got MAGA. Oops. Didn't read the disclaimer, I guess. How has regime change, by the way, worked out for us in Afghanistan? We got in to remove the Taliban. Trillions of dollars spent. Thousands of lives. And we left Afghanistan and reinstated the Taliban back in power. We got involved in regime change in Syria as we were fighting ISIS. Yet after doing regime change in Syria, we've replaced the government by ISIS. So what's the point here? And oh, by the way, you see today, they're bombing Christian churches in Syria now. I mean, what do you think is going to happen? You put ISIS back in power. I don't remember back in the previous regime, Christians were getting bombed like this. How's that regime change working for you? In Iraq, we went in to remove Saddam Hussein, only to see his daughter probably going to become the next president of Iraq. The only reliable partner who was against Iran in Iraq is Saddam Hussein. So all of these thousands of lives, trillions and trillions of dollars to do regime change by reinstalling the same regime, which tells you right off the gate that all of these wars are just money laundering operations. They don't really believe in anything. They don't want to do any change. None of that bullshit. Liberating, freedom, all that bullshit. Just want to go do regime change, play a little bit of game, wash some money, and then who gives a shit? Put the Taliban back in. So I'm just letting you know right now, because a lot of you said, oh man, we're not going to be interfering in the Iran conflict. Stop being hysterical and dramatic. What do you got to say right now? So I'm telling you right now, right here, we're going to head to that regime change. And you think what the consequences will be. And it's not the rosy picture that they're painting in the media right now. Oh, the Iranian people are sick and tired of the regime and they're going to be liberated, like Dick Cheney said. That's not going to be the case. I'm just telling you right now. So we go back to Iran's options. What is the sixth option that Iran could use? Here's a hint for you. The headline from Newsweek reads, Iran's lawmaker eye page from North Korea's nuclear playbook after U.S. strikes. What are they talking about? See, Ian Bremmer made a tweet last night, said, turns out not having nuclear weapons can be a serious vulnerability. Iraq, Libya, Ukraine, Iran. In other words, Kim Jong-un was right all along. If you want to survive the hegemony of the USA, you better have some nuclear weapons. Not only that's going to lead to the end of the nuclear non-proliferation agreement or whatever. Think about the message to China, which says you got to ramp up building those nukes. You got 600 nukes right now. Make that 6,000 ASAP. Otherwise, you're not going to survive. Not a good development for humanity, folks. And the Russian former president came out today and said that a number of countries are now queuing up to hand the devastating weapons to Iran, talking about nuclear bombs. That, okay, smartass, you bombed Iran's nuclear facilities. Maybe you didn't do damage to the uranium, the enriched uranium that they moved somewhere. But on top of that, we're just going to give Iran a nuclear bomb. If that happens, again, would the Russians really hand over a nuclear bomb to Iran? I kind of doubt it. I think the most plausible scenario is if China smuggles a bunch of nuclear bombs from North Korea, but then you have to move through Pakistan, and how would Pakistan react to all of that to deliver the nuclear bombs to Iran? But if Iran can get their hands on a nuclear bomb right now, either from Russia, China, or North Korea, they can attack a U.S. base or Israel, and they come out and do a nuclear test and say, surprise, you said you ended our nuclear program, here's a nuclear bomb for you. That's the sixth option, and that could be a possibility. What are the odds on that? I think you got to go to the poly market. I didn't see any odds for that, but maybe we can start a new one and do our own money laundering scheme. But until then, folks, we have to talk markets now that we talked about the macro and the geopolitics, and let's talk about the Maverick strategy. What do we do now in this market? Maverick strategy states moving from credit spreads and cash-generating strategies to deploying the ammo heavily on naked options as a major break in the S&P 500 is imminent. Now, am I telling you it's going to be a break to the upside or the downside? The majority of the evidence says to the downside, but you cannot dismiss the case to the upside. There's still a good case that the break could be to the upside. All I'm saying right now is the time to roll up those sleeves and polish your bazooka, because you might need to use it really, really soon. In my strategy on May 9th, I said that we're going to enter a market where we see consolidation throughout the summer, and the best strategy would be neutral strategies, as in to generate cash, to sell options and raise cash. On the 9th, I did the E-mini futures. We did an iron condor, sold the 6100, bought the 6300 calls, and sold the 5900 puts, and sold the 57, netting a credit of about $8.40 a piece. I did 100 of those, so you do the math. On the 16th, we doubled down on the strategy by opening call credit spreads in the NASDAQ futures, selling the 22,000 calls, buying the 22,500. Now, as in the expiration date of these trades, which was Friday, both expired out of the money, meaning that we netted the entirety of the credit. Now, I did 100 each. That's an easy million. When was the last time you made $1 million sitting on your ass and just waiting on something to happen? That's why we're doing trading. We're not digging ditches on the street, but we're probably going to do that pretty soon, given how the economy and the nuclear situation is. But now that we've raised a nice amount of cash, what I'm saying is keep that ammo. We're going to deploy it really, really soon. And it comes down to what's going to happen to the price of oil, of course. I'm looking at crude oil here, the monthly chart. I don't know when. We've certainly been talking about this for a while now. But if you look at the MACD indicator of the monthly in crude oil futures, it's about to release all of that energy to the upside. It's been under negative momentum since 22. We've been waiting and waiting. When will that energy be released? I think we're getting really, really close. And to me, this is the scariest chart of them all, because I'm looking at it, and let me know if you agree or not in the comment section. If you put on your technical lens alone, where do you think this chart is going? I think the majority of you would agree that from a technical lens alone, this chart is probably about to break to the upside. Now, why the hell would it break to the upside when we have global recession fears, stagflation, and tariffs and all of that? The only viable possibility why we would see the oil price moving significantly higher is a major geopolitical event. So if you think that we've seen the major geopolitical event yesterday, according to the chart right now, you haven't seen a damn thing yet. This thing is going to escalate. I hope I'm wrong, by the way, but I don't think that's going to be the case. And that's why it's a really terrifying chart to look at. Now, in the short run, when you look at the skew for Brent oil, for example, we've seen the highest skew in years, the call skew, which usually comes closer to the top. You might see oil reacting negatively in the short run, as in to say, okay, maybe now we're going to reach a settlement. Maybe things cooled off, Iran got hit, but they didn't respond for 2 days. But the longer run charts are saying, no, things are going to flare up, and you will see a massive escalation, which will lead to a monthly breakout in the price of crude. Now, what you need to understand is a move higher in crude oil negative or positive for the market. Because what you're looking at right now, I'm using US oil, this is WTI in green, and then you have the S&P 500 stock market in red. You can see that we have periods where we see, for example, crude oil going higher and the market going down. When you see that, then we have an inflation scare. We've seen that in 22 during the Russia invasion of Ukraine. And then we've seen it in late 23 when inflation began to move higher. And there was a little bit of concern that the Fed might not cut rates. Of course, that changed later on, but the point is it illustrates for you a period where we've seen an inflation scare. Now, you could see other periods where we see the price of oil, for example, heading down and the stock market heading higher. Usually that comes on inflation relief episodes, such as in the aftermath when oil topped in 22, such as, well, the resolution in the third and fourth quarters of 23 when the Fed said, yeah, we're going to cut rates. And you see it recently in 24 as the market rallied and we've seen crude oil heading down. All of that is based on, okay, inflation is going down. That means maybe the Fed is going to begin to decrease rates, so the market heads higher. How do you know that this is going to be an inflation scare or not? Plug in something such as the TMV. The TMV is the inverse of the TLT, which is the bond ETF. Now, you might already know that bonds move inversely. The price of bonds, that is, moves inversely to the yield of the bond. In other words, TMV is tracking the yields, not the price of bonds. If we see, as I'm highlighting right here, TMV, of course, in white, if you see crude oil and the TMV, aka bond yields, heading higher together, then it's problematic because then it's saying, watch out, we have an inflation episode. What do we see right now? Not quite. We see yields kind of heading down a little bit. We see oil moving higher. But if that begins to change, then we got a massive problem in the market. Why? Because the geopolitical event has now become an economic event, has now become a monetary policy event where the Fed perhaps not going to be able to cut rates at all this year, or perhaps increase them to combat the inflation risk. Let's do a few more charts here. How about the E-mini futures at the time of the recording of this video? This is adjusted, of course, so we count in all the dividends and the contract updates. If you look at this, we have a break outside of the rising wedge. We're below 6,000 right now, but we haven't lost the 200 days moving average in orange. So not definitive break to the downside yet. Now, if we plug in the momentum indicators, what do we notice? We notice that the RSI has a negative divergence. The relative strength index beginning to weaken. Negative sign for the market. Then look at the MACD indicator. It's beginning to split. You see the red impressions in the histogram getting larger and longer. Not a good sign either. Go to the vortex indicator and expand that, and you will see that the red line, the bearish line, is about to cross above the bullish line in blue. And the last time we've seen that was right before the tariff war and Liberation Day. So it was spot on to go bearish the market. Do we have the cross right now? No, we don't. But it looks like we're heading to that outcome. I would say closing below the 200 days moving average and seeing that cross in the vortex indicator will probably be your confirmation. How about we do the weekly chart for the E-mini S&P 500 futures? Again, rising wedge, we're breaking down. In the weekly chart, what matters is the 50 weeks moving average, not the 200 days. I mean, they're really close to each other right now. So the 50 weeks is sitting at about 5,900. It's just used as an extra layer of confirmation. A lot of folks don't want to short right away or hedge right away when we see a close below the 200 days moving average. They'd like to wait till they see the 50 weeks moving average lost before taking the initiative. In any case, we look at the vortex indicator in the weekly chart. What do we see here? The red line is firming up a little bit. The blue line is losing a little bit of momentum. No confirmation yet, but it looks like the last time we've seen bearish momentum overtaking bullish momentum in the weekly vortex. What happened? We got a massive correction. So this could be, again, depending on the developments that we see this week, the beginning of a bearish wave, aka a correction to come. And it could be steep, but one step at a time. We're not going to go ahead of ourselves right now. Another chart for you is the dollar weekly chart. What do we do here? I think we have a break to the downside. Yes, the dollar is oversold, overshorted, and there is a possibility it could rebound. But if I had to bet here, I would say the rebounds will be short-lived, and the dollar is going to continue to lose value, specifically if we keep getting engaged in this war. If it becomes a battle in the Strait of Hormuz, you're probably going to see the dollar crashing because it will no longer be looked at as a resource of safety. On the other hand, you're probably going to see gold rallying. In the short run, though, you could see a little bit of a rebound in the dollar and maybe a revisit by gold futures to the 50 days moving average in blue. But I think, again, in the medium to long run, the dollar is going to head down. The rebounds are opportunities to fade, short, sell. While in gold, the dips are opportunities to buy and long. Now, what happens to the bond market? This is really interesting because what you're looking at is the Dixie, the dollar index in green. You're looking at the S&P 500 in red. And then in white, you're looking at the TLT, which is the ETF for long and bond yields, 10, 20, 30. It's actually 20 to 30, but we use it as a proxy for the 10 once in a while. But anyways, the TLT measures the price of long maturity bonds, not the yield. What we notice pretty much the majority of the time is bonds move inversely to the dollar until recently, where both of them going down together. And this is what's different about what we see in the market right now versus, let's say, the corrections, the bear markets, the crashes that we've seen before. Usually when you have a rush to safety, bonds rally, and we see the US dollar being sold, as in to suggest that the Fed is going to loosen the monetary policy. In positive market periods, when the market looks toward expansion, growth, everything is good in the economy, soft landing, for example, what do we see? No need for investors to buy bonds, US bonds, the safety. So we see a wide line going down, and then we see the dollar firming up with expectations that the Fed probably not going to need to loosen the policy anymore. And that firms up the value of the dollar. But when we see them moving together, it is a really interesting phenomenon. When you see the TLT, US bonds, and the dollar index moving higher together, traditionally, this was through times of geopolitical flare-ups, where folks say, okay, let's go to the safety of the dollar and bonds. But what we've seen as of late is the dollar and bonds, US dollar heading down together. Why? Because we have the sell America trade. We have the opposite of faith in America when we have geopolitical events. What we're seeing right now is when you have any need for hedging, you dump the dollar, you dump US bonds, and you buy gold instead. We will see if this is going to change or not, but my 2 cents, they're probably going to continue to go down together because involvement in war right now, on top of the deficit issue that we got, will at least move bond yields higher and the value of bonds down. And because of the tariffs, instead of buying the dollar, folks will continue to short the dollar and sell it. That's my assumption right now, but you got to keep an eye on this right here. This is really important. How would the dollar move vis-a-vis bonds? Are they going to do together, head down together? Will we see going back to the regular inverse correlation between the two? Really important to keep an eye on to understand the message by the market. And by the way, isn't it interesting when you see good correlation between bonds in white and the market in red? Why do we see such divergence when we have bonds heading down / consolidating while we see the stock market rallying significantly higher? What does that mean, Maverick? It means that we are, or we were, in a bubble. I think you know why. The majority of stocks didn't do pretty good, didn't move that much. But because of the AI bubble and the heavy weight of the names involved in that mania, with the price of the index, we see this divergence between the S&P and bonds. And again, when you use your rational side of your brain, you're going to say, okay, so once the bubble is over, bonds was the warning ahead of time that we are in a bubble, and at the end of the day, the market is going to catch up with the action in bonds. The divergence is not going to last for too long. Something to keep in mind. Anyways, how about Bitcoin? Daily chart. Lost my support, 104,000. Lost the 50 days moving average in blue. We have support at the 200 about, let's say, 96,000. Do we head all the way down 96,000, or do we test 104,000 as resistance and then come back down to 96? Either or, but for now, Bitcoin is showing negative signs. And it could be a leading indicator that the market is about to flip too. Now, I want to talk about uranium stocks because I think a lot of them moved ahead of time. And it may be sell the news kind of phenomenon right now. So we talked on the 13th about a company's tickers MP. And we said buy. This is probably going to surge higher really in a short amount of time. And of course it did. Huge rally, but as I said in Thursday's session, and again, I'm going to repeat it. The volume is receding, which is a sign that you probably should be booking your profits here. I mean, you look at the OKLO, another uranium nuclear play. That one looks like it topped already a few days before, and it is beginning to reverse and correct a little bit. And then, of course, we have CCJ, Cameco, the most reliable uranium nuclear play right now. The weekly chart, it looks to my eye that we have a topping candle. So my advice would be book profits from OKLO, book profits from MP, and any uranium play that you got, even CCJ, and wait for a dip before you buy, once again, the most reliable name, CCJ. So that's what I'm going to do. I'm going to keep the money on the side and then wait for a correction in CCJ and then buy it. So what I'm looking at, if I plug in the Fibonacci retracement, I would say a move down to the 38.20% retracement around 57, 56. That is okay. If we go down to the 50 retracement, that would be ideal to see a rebound at that point, and that's going to be the ideal point to buy. But again, Until then, we gotta wait and see. Now let's move on to the conclusion of this video. What do we have on the economic calendar tomorrow? Monday, the 23rd, we have the Services and Manufacturing PMIs, aka the Flash PMI. Really important about the price index and what the producers see coming in the pipeline. From tariff inflation, from oil inflation, who knows. Then we have existing home sales. Tuesday, the 24th, we have the Case-Shiller Home Price Index, lagging indicator, but it is always important. Then we have consumer confidence, and of course, don't forget about the Fed zombies. We have one from Cleveland talking, and then we have the big zombie himself, Powell, testifying in the House to the Financial Service Committee. Comes Thursday, the 26th, we have the trade balance, retail, and wholesales inventories on top of initial jobless claims. Durable goods orders, core durable good orders, GDP, the second revision, pending home sales, another speech by the zombie from Cleveland. We conclude the week Friday the 27th. We have consumer sentiment. This is going to be the final reading, really important, because it includes inflation expectations. I don't know if it's going to include the geopolitical flare-up. I don't think so, but we'll see. Then we have the PCE, the price index, Fed's favorite, of course, what comes with it, such as core PCE. All of that is going to be important as we begin to digest the last FOMC meeting and the conference by Powell. What would be the prospects of rate cuts throughout the year? Right now, the market is pricing 2 cuts. Would the PCE change that? Will we see the odds for a September cut being reduced? Keep an eye on that too, because that's going to have a market impact. The geopolitics are important, but its economic impact is what matters to the market. Then on the earnings calendar, we have Micron, we have Nike, we have FedEx, we have Carnival Cruises, we have General Mills, we have McCormick, we have Walgreens, so we have important companies still to come. We'll keep an eye on them. But folks, this is all I got for you for tonight's video. If you found the information presented in this video informative, please return the favor by pressing the like button, subscribing to the channel, leaving us a nice comment in the section below, participate in the conversation, better yet, join us as a Maverick member to access the daily shows and the bonus videos we put out, either here on YouTube or Patreon, links in the description. But with that, folks, once again, this is all I got for you for tonight. Thank you for listening. Thank you for watching. I appreciate and love all of you. I will be talking to you again tomorrow. Good night.
We're the middle children of history, man. No purpose or place. We have no Great War, no Great Depression. Our Great War is a spiritual war. Our Great Depression is our lives.